Hey, what's going on, everyone? We have officially reached the bear market for the first time in 11 years. A bear market is triggered by a 20% decline from a recent high in the market. So that actually happened this last week. Now, unfortunately, bear markets are usually followed by a recession, and that unfortunately also means higher unemployment. Now, several factors have contributed to this most recent downturn, and that is the C-19, and I actually think that's just a catalyst to a lot of already brewing issues that were out there. So prices were already so inflated. I mean, PE ratios were at record highs, debt was at all-time highs, and everything that's just been going on with oil. I mean, so much uncertainty with everything that's been going on here in 2020. The 2020 presidential elections are also this November. Now, 3 of the largest single point drop days in the Dow's history have actually happened this week, which is absolutely amazing. Though obviously the Dow is a lot larger today than it was throughout history, so that's more likely to happen. And I would say that none of this is really unexpected, especially in the long run. Recessions are a normal part of the economic cycle. Bull markets can't just keep going up forever. What we've seen these past 11 years, that's actually really unusual. I mean, stock markets tend to go up 7 to 9% a year, and that includes times like this when it drops 10% in one day. And it also includes years like 2019 when the stock market went up nearly 30%. Yeah, I mean, that was just a few months ago, but I feel like we've all forgotten those times. You need to be willing to take the good with all the bad that also comes with it. I would say if the stock market lost on average 7 to 9% a year, I don't think many people would invest in it knowing that the odds weren't in our favor. Wait, actually, never mind, because 99% of day traders lose money, yet so many people try their hand in that. If there was a sale on clothes or electronics, as there is, say, on Black Friday, we would be pushing people down, fighting each other, sending death threats for that toaster that is now 20% off. Well, how come we don't have that same mentality when the stock market is on sale? In fact, I'd say it's actually quite the opposite. When the stock market was reaching record high after record high, people were willing to pay a premium for stocks. Suddenly, everyone was a Tesla bull. Now nobody wants anything to do with stocks. Also, what's up with all these big-time YouTubers who showed off all these big gains throughout the years? Now they're so silent when the market's in the red. I guess it's a lot harder to sell your $500 courses when you're doing just as bad as the rest of us. All right, so now you guys know I'm not trying to sell you any course. I'm just trying to be transparent here with my portfolio on YouTube, and that includes showing you guys the red days. It would be easy if I was just showing you all the times I made money in the markets. All I ask is if you guys really like this content, just tap that like button and subscribe to the channel. I always love seeing feedback, positive or negative, because that really lets me know if these are the types of videos that I need to continue to make. So today I'll just go over some buys, companies I really like at these attractive prices, and also there's some stocks that are trading at ridiculous dividend yields, but not in a good way. When I say that, I mean that their yields are so high that I'm almost certain that they're not going to be able to maintain that, and I anticipate a dividend cut coming. So the first stock on my list is Apple here. I'm still up on this position just because I got it at some really great prices throughout the years, and it's been able to make me money. But as you guys can see, the last month down almost 20%. We have Shell. Now, I don't know where to go with this particular sector here. Shell and ExxonMobil, I am down pretty big on my positions. Now, I still believe in oil, but obviously everything that's been happening with OPEC and just all these price wars with oil, they're trading at ridiculous yield. Shell is at like a 13% yield. ExxonMobil's around 10%. And I don't expect these oil companies to be able to provide the funds for those dividend payments with oil trading as low as it is. They may be able to maintain it for a short period of time, but there's no way they can continue to give away 13% yields. So I'm not sure where to go with these two particular oil stocks, but this is why I'm so glad that I'm diversified. I mean, Shell only makes up 1.28% of my portfolio now, and ExxonMobil, not much different, 1.32%. Then we have Applied Materials and NVIDIA's. Semiconductors have also been hit pretty hard here. Applied Materials down nearly 25% in the last month. And NVIDIA also seems to be down here as well, 15%. I'm now no longer up on this position, but I expect both of these companies to bounce back, especially heading into this 2020s decade. Now, Medtronic, this is a stock that I really don't understand why it's fell so much. I mean, healthcare stocks to be down almost 30%. Medtronic is an industry leader in medical equipment. As far as I know, people are still going to need their spinal products, insulin pumps, and all the other great products that Medtronic makes, pacemakers, and I definitely think this is a little oversold here, so I'm going to be buying a share. Let's just buy one share here and put it up. Okay, great. So now I own another share of Medtronic, now bringing me to 5 shares total. Just going to continue to dollar cost average my way through with them. Then we have AbbVie here trading close to a 5.5% dividend yield. It looks very attractive. I'll have to check it out throughout the next week here. Pfizer reaching new 52-week lows. Again, another stock that I just think is being oversold too much. A lot of disappointed market sentiment in basically what they're doing with their products that have lost patent protection and offshooting that into another company. Johnson & Johnson, this is one I have been keeping an eye on. As you can see, it's down 15% in the last month. So when that gets down to about 20%, that's when I'm going to be adding more shares. Johnson & Johnson can't get much safer than that. UNH, I expected to drop a little bit more here. In the last month, it's down just a little under 10%. I think with Joe Biden doing better in the polls and now looking like the likely Democratic candidate, these insurance providers are sleeping a little bit better at night. MasterCard, this is one that I rarely ever regret buying a share of a stock, but I bought it here on this day at around 324. I thought I was on a dip, and then later, like literally minutes after I bought that share, MasterCard put out a statement saying that they were already expecting their guidance for the next quarter's earnings to be lower, and then the stock fell like another 10%. I was pretty mad. That's one of the few swipes I wish I could get back. That's caused me to now be negative on this stock, but will be a stock I continue to buy into, as well as Visa here at 168. I'm still up on this position. Those two companies should continue to do great in the future. Microsoft, this is another one that people have been eyeing because it's down 21%, one of the largest company in the world. Market cap over $1 trillion, guys. They will be just fine during whatever recession or bear market we have. Microsoft will be fine, and so will Intel. It's been around the block. Real market crashes, and I don't see any sign of them slowing down. Recently bought another share of them as well. Then we have McDonald's here. I just made a video about how great that their performance has been during the last couple recessions, and this is going to be the next one I really want to buy here today. My average cost on this is $205, so anytime I can get that on a considerable discount, such as today, looks like the stock is going up and up as we're looking at it here. Looks like I picked the worst time to buy today. It's right when the market's about to close, and looks like Trump's announcement on his national emergency is going to help the market, at least today. Who knows what Monday will bring. So buying one share of McDonald's. Also, guys, I will be buying new positions, so keep watching and you guys can see what these new positions are. They both trade at ridiculously high dividend yields. Then we have Starbucks here at 66.77. Now, I was so confident that this stock would continue to go down. I knew that when Starbucks announced that some of their stores in China were going to be closed, I knew that the market was not correctly pricing that into the position of the stock. I mean, they announced that in late January, and the stock was like barely affected. And now I finally think it's being priced in correctly. So I will be buying another share of them as well here today. Let's just do one before the market just continues to go up. All right, so now I own another share. Then we have Pepsi. Pepsi fell by 10% just yesterday. The last month, it's down 15%. I'm going to be keeping an eye on them throughout this next week. General Mills, this is one that I was surprised that it's actually up in the last month. It must be very recession-proof here. People are still going to be hoarding grocery products and cereal, even in bad times that we're experiencing now. Medical Properties Trust, this is another one that I think is oversold here in the last month. It's down almost a quarter in value, which is absolutely crazy. And that means that Medical Properties Trust is now trading above a 6% dividend yield. And hey, I'm all about that. Let me get some real estate here, 2 shares. It's gonna cost about $35, no problem. All right, just added more shares to Medical Properties Trust. Then we have Equinix here trading at, it's still up in the last month, but obviously it's been quite the roller coaster. This is one of the better performing stocks in my portfolio. Seems to be holding through these rough times. We have more real estate companies here with realty income, not reality. Glad to see it's bouncing back. Store, which I think is still grossly oversold here, 33% almost in the last month. Just ridiculous. NRZ, now this is another one that if I expected a company to cut its dividend, it would definitely be them. But I was already factoring that in when I bought this position. So if they do cut their dividend, I'm not going to sell it because it's right now it's trading at about a 17% dividend yield. Even if they cut that in half, that's still an amazing yield, and I will just continue to hold. Just have to hope that the company doesn't go bankrupt. Now JP Morgan, I'm kind of mad that it's back over 100. It was trading in the 80s at one point yesterday, but unfortunately, this is what happens when you try to keep waiting for the bottom, is that some of these stocks do eventually recover. So my average cost is $119. I'm definitely going to be buying into this whenever I can. Great company, and we all know that they're going to be safe during recessions just because of the way that their business model works. And you guys know my opinion on that. So I'm just going to be buying another share. And now I own another share of JP Morgan, and it's trading at over a 3.5% dividend yield right now, which is very good for them. Bank of America, I will keep another close eye on. It's been down a lot here as well. Now Disney, this is another one that's been sold off way too much. The one in California, what is that? Disneyland just announced that they were closing. I was actually surprised that they hadn't already closed, but really, I mean, if you guys think about it, is Disney really worth 1/3 of what it was just a few weeks ago? Is this somehow causing Disney to lose value like that? I don't think so. I think it's definitely oversold, but I had recently been buying so much of them that I want to kind of hold off. And then Boeing, this is just trading at not only has it fell so much, 52% in the last month. Oh my gosh, this is just terrible in my total return on them, but they're trading at over a 5% dividend yield actually. This is another one that if they cut their dividend, I would not be surprised at this point. There's no reason for Boeing, a company like Boeing, to be trading at a 5% dividend yield. Now, with the market about to close, I do want to try and sneak in these newer positions before the market closes. So Duke Energy, this is one I have had my eye on for so long. It had been trading at 80 earlier today. This is, again, I was thinking of buying this when it was in the $100 range. So to see it even at $84 as it is right now, this is a bargain price, I think, for this stock. I get about a 4.6 starting dividend yield. Obviously, Robinhood is not correct here. And utilities is something that my portfolio is not very diversified in. So I want to make sure I'm diversified in the utility sectors. Duke is basically a monopoly in the regions that it serves in the Carolinas, Southeast corners, and it's increased its dividend for 13 straight years and pays about 70% of its earnings to shareholders. So I want to buy them. And again, guys, this is why this is never financial advice, because what I need in my portfolio is not what you guys might need in your portfolio. So I'm glad I can finally get into Duke, and there it is. Now I am an owner of Duke Energy. And then the other stock I wanted to buy today was one that I don't really see much here on YouTube, and that is Prudential. So if you're one of the few people that owns this stock, let me know in the comments. and I would love to interact with you guys about it. But they manage over $1.5 trillion in assets. They provide life insurance, annuities, retirement-related services, mutual funds, and investment management. So I'll let you guys read some of this about section, but basically, I mean, I know you guys are watching this video, and you're probably taking full control of your finances, but keep in mind, most people out there have no idea how to do anything related to finance. They're very financially illiterate, likely to change in the future. And I know for most employees, we don't really have that much control in our work-related sponsored retirement plan. Like, I can't just tell my company, hey, drop all my 401k matching straight into my Robinhood account. No, I can't do that. I have to choose whatever my company wants for me. Like, all that money goes wherever the employer wants it to go and who they're doing business with. So that's really going to help a company like this. So I will be dollar cost averaging throughout time, but for today, I'll just buy one share here at $52. And most analysts have this stock well into the hundreds. It's fell, I think, way too much here in the last week. Basically, these insurance companies need interest rates to be higher. I mean, they rely a lot on bonds, and they're very sensitive to any cuts in the interest rates by the Fed. So most of their customers are actually from the US and Japan, and those are two very developed and strong economies. And I think the stock just fell way too much because of insurance companies just relying too much on bonds to be profitable, and any change in the federal interest rate being cut, that's going to cause serious panic to their balance sheet. So as time continues, I will continue to add to Prudential, and I just want to be diversified more. I mean, honestly, this recent downturn, I thought I was diversified. I own like over 40 stocks. Obviously, each of them have different allocations to how much they make in terms of percentage of my portfolio. But it's times like this that I realized that, hey, maybe I do need to be more diversified, enter different sectors that I'm not even exposed to. And that's part of the reason why I bought this stock. Then we have 3M here. You know, I was surprised that this stock fell below 150. I thought that was really going to be the floor for them, but I'm just shocked to see them continue to fall. But again, this is a very strong company, and I do expect them to continue here. They're getting a lot of business with their masks, which, obviously this isn't the type of way you want them to get business, but that's what helps when you sell over 55,000 different products. And I just made a video about Procter & Gamble, so be sure to check them out. I really don't know why they fell so much, especially with people buying out the shelves at Walmart. For them to even have a down day during times like this, I was very surprised. Still up pretty big on this position, got in at great prices. And then we got Southern Company here at $53.84. I'm surprised that this stock actually fell as well. Utilities are usually a bit more stable, so maybe next week I will buy more of Southern. Okay, as we enter aftermarket hours, we have FedEx continuing its free fall that it's been doing basically ever since I bought it, and down huge on this position. Also haven't been doing that great as well. CSX down 26% in the last month. UNP down 22%. My position in this one, not too terrible, down 7.5%, but this gives them a very strong dividend yield to start off with. Then we have Verizon and T-Mobile trading at very attractive dividend yields right now. These are two very stable companies that I expect to continue to be able to survive regardless of what is going on in our economy. Then we have Waste Management at 105. Now, this is one that most people say is a recession-proof stock, so I think they fall a little bit more than usual. An analyst just downgraded them. We have Chubb, another insurance company here. This one based out in Switzerland, but does do a lot of business around the world. Chubb is also a dividend aristocrat. Then we have SPHD, recently doubled my position on them. HD, high dividend, low volatility, as its name claims, yet really its low volatility doesn't really seem to be meaning much here. It's down 23% in the last month. It is nice that it pays a monthly dividend. However, it does have sort of a high expense ratio. And again, it doesn't seem to really be that much less volatile than other particular individual stocks, but it's always nice having a little bit of ETF exposure. And then there's Duke again, which I just bought today. And glad to see, looks like a lot of companies are doing very well here in after hours. So let's get back up here. Wow, it's everything looks like the market just completely went up this very last little chunk here right after Trump made his announcement on a Friday. So, hey, I expect the market just to continue to fall again on Monday. It's been a rocky roller coaster here. Just let me know how you guys are feeling, what you guys are investing in the comments, guys, what you guys want to see more of. And I really just think that we're all going to be able to get through this together. Whatever our financial goals are, let's just keep reaching for them. Don't give up, and I'll see you guys next time.